Welcome to Volatility 411. For Equity Armor Investments, I'm Joe Tigay coming to you on a Federal Reserve decision day. Markets eagerly anticipating this, and ahead of that number, we're seeing a downward move in interest rates, a big upward move in tech stocks, and Nasdaq's up 2.6%, and the S&P 500, of course, is moving up. Also, we're up 1.25% right now ahead of the Fed announcement, and with that, we have the VIX down under 23.5. So a low level for the VIX, still elevated historically, but a low level recently for the VIX is where we're waiting this Fed decision. Now, the narrative today is interest rates are lower. That's good for tech stocks. And that there is that correlation, like when rates go lower, tech goes higher. But if you look under the surface, the reason interest rates are lower, and I was talking about this last week with that negative 210 spread, is that the market and bond traders specifically are pricing in a recession. They're saying as soon as the Fed raises rates, they're going to turn right back around and lower them, and that's going to be because the economy is so slow, and the Fed will come to the rescue. Now, the Fed is meeting today, and this is in an interesting environment for them. We have really good jobs data, and inflation is stubbornly high, yet interest rates are coming lower. There is a chance the market might view them as very hawkish given the current economic situation. Now, on the other hand, the proponents of the rates going lower and people saying that the stock prices can go higher, their case is pretty simple. They say, the money supply peaked in March. Inflation follows very closely with the money supply. We're not going to have high inflation anymore, and the Fed's going to be able to react, and these stocks can go higher because interest rates will be lower in the second half of 2023. On the other hand, of course, inflation is extremely high. Even if it does come lower, let's say it comes down significantly to 6%. 6% is drastically too high. Even if it comes down dramatically all the way down to 4%, that is way too high. 4% inflation would mean we need a 4% GDP just to keep pace. I don't see that happening. We need inflation to way closer to 2%. To have a chance of treading water here. So for me, the Fed's got a lot of work to do, and I think they need to be a little stronger in curbing inflation. So we'll see if that plays out one way or the other. Now, I think the fact that the VIX is still over 20, still at 23.5, is signaling to me that volatility traders might be with the bond traders saying that a recession is coming and stocks might need to react when that does happen. For Equity Armor Investments, I'm Joe Tigay.